to the 5 at 5. And we are talking today about FICO scores. If you've been applying for a home or you were pre-qualified before, you may have noticed that the FICO score requirement's a lot higher now that we're in a pandemic. Let's get more info on that, how long that's going to last. What do you do if you've been possibly FICO scored out of the market and you can't qualify even though you were good before? And we're going to get those answers from Chelci Clarke, our long mortgage consultant, who's here today to help us understand a little better what's going on with that.
Sure. Thanks, Heather, for having me. I appreciate it.
Sure,
yeah. And so it's a really great question. A lot of lenders right now, it is temporary. We're, suspending some products or FICO scores. And we're seeing that a lot of those people who are under that 660 FICO score or credit score, it's just another name for it, are no longer qualifying. So essentially you would qualify just fine because you have great assets and your debt to income looks good, but your FICO score is under that 660 mark. So we've noticed that that's become a problem. So Prosperity and Long Mortgage, we are Berkshire Hathaway owned. We decided to combat that a little bit and help you out. And until May 30th, we are offering free credit assistance and consulting for our clients. So my biggest recommendation there is if your score is just under that 660 mark and you're otherwise would have qualified and you were shopping for a home, 2 months ago, to definitely put in an application. Heather will have my information after this video, and we can definitely take a look and get your scores up and do that rapid rescore where we can get you back into the qualifying range and shopping for a home.
Great. And you think this is going to go away? This is going to go away as soon as we get up and running again, right?
Definitely. Yeah, I'm very positive as far as having a positive outlook. Once the economy gets back up and running and people go back to work, I know it's going to be a slow, process trying to get back through the hang of it. But these products, suspensions are definitely temporary. And we want to make sure that, those clients that are in that system where they need down payment assistance or their FICO scores are low. Yeah. I mean, they need it for a reason, and we're not trying to cut them out in any way, shape, or form. We just don't want to put them in a position where it doesn't do them well to get a loan. We're not going to set people up for failure at all. So we just want to make sure everybody's got a positive outcome and we come out of this pandemic healthy and, back on top.
Okay, great. And are they needing to put down a larger down payment now during the pandemic? It's not that, it's more just the FICO scores that have shifted.
Yep. So the credit, as far as the credit scores, yes. So they have shifted just a little bit. Yeah. But as far as down payments go, conventional still has the 3%, 5%, and 10% down options. And then FHA still has the 3.5% minimum option as well. And then of course, VA, which is the bulk of my business, they're not obligated to put a down payment at all.
Right. Oh, that's awesome. I know it's a different situation in every institution, and I've heard some things that would have been harder for some of my buyers, soon to be buyers. So that's great. It seems like a minor shift. So thank you so much for sitting down with us. And if you have any further questions for Chelci, her email and website and contact info is going to be in the comments below. Thank you, Chelci.
Thanks, Heather.